Have you ever wondered if investing in stocks is a myth or reality? This question has crossed the minds of many. Often, investing in stocks is seen as a gamble, a high-stakes game where the odds seem to be stacked against us. It's easy to be swayed by tales of people losing their hard-earned money in the stock market, leading to the belief that it's a sure-shot way to lose money. But is this really the case? Is investing in stocks just a myth, or can it be a reality? The answer is, it's a reality. Yes, there are risks involved, but investing in stocks is a viable and proven way to grow wealth. The key is understanding how it works and making informed decisions. Investing in stocks isn't about getting lucky, it's about being smart and strategic. So you see, investing in stocks is not a myth, but a reality. But how does it work? Stick around to find out. So what exactly is investing in stocks? Well, in the simplest of terms, it's like buying a piece of a company. When you purchase a company's stock, you're essentially buying a small slice of that business. You become a shareholder, which means you own a tiny fraction of that company. Now, as the company performs well and its value increases, so does the value of your tiny slice. This is how you make a profit from your investment. When you sell your shares for more than what you paid for them, you're making a capital gain. And that, my friends, is the name of the game in stock investing. But of course, it's not always smooth sailing. There's a flip side to this coin. If the company doesn't do well, its value might decrease. And if that happens, the value of your shares goes down as well. This could result in a loss if you decide to sell your shares. Let's say, for instance, you bought shares in a tech startup. If that startup develops a revolutionary product and its value skyrockets, you stand to make a substantial profit. But if the startup fails to deliver on its promises, its value could plummet, and you could end up losing money. This is the inherent risk in stock investing, and it's something every investor needs to be aware of. It's also worth noting that stocks can provide income through dividends. Some companies, particularly those that are well established and profitable, return a portion of their profits to shareholders in the form of dividends. So even if the stock's price doesn't increase, you can still earn money from your investment through these regular payments. That's the basics of stock investing. But how do you choose which stocks to invest in? Well, that's a whole different ball game, and it's what we'll be diving into in the next scene. So stick around, because things are about to get interesting. Choosing which stocks to invest in is a crucial part of the process. The first thing to look at is the performance of the company. How has it been doing in the past? Is it showing consistent growth? These are the kinds of questions you should be asking yourself. But performance isn't everything. You should also consider the industry in which the company operates. Is it an industry that's on the rise, or is it facing challenges? For instance, if you're looking at a company in the renewable energy sector, you might want to consider the increasing global emphasis on sustainability. On the other hand, a company in an industry that's facing regulatory challenges might be a riskier bet. Another factor to consider is your personal interest. Are you passionate about the company's mission? Do you believe in what they're doing? Investing in a company that aligns with your personal values can make the process more rewarding. Now, let's debunk a common myth. Always buy low and sell high. While it sounds reasonable, it's not always the best strategy. The stock market is unpredictable, and waiting for the perfect moment to buy or sell can often lead to missed opportunities. Instead, consider adopting a long-term investment strategy where you buy and hold stocks, riding out the market's ups and downs. Also, remember that diversification is key. Don't put all your eggs in one basket. Investing in a variety of stocks can help to spread risk and increase the potential for returns. Lastly, don't forget to do your own research. While it's easy to follow the crowd, it's important to make informed decisions based on your own analysis and judgment. There are plenty of resources available online to help you understand the ins and outs of a company and its stock. So, choosing the right stocks is more complex than just buying low and selling high. But what happens after you've made your choices? We'll delve into that in the next scene. Stay tuned. Buying stocks is just the first step. Knowing when to hold and when to sell is equally important. Picture this: you've just bought shares in a promising company. Now what? Well, there are two main strategies that investors typically follow: holding stocks for long-term growth or selling for short-term gain. Let's start with holding for the long term. This strategy is based on the belief that over time, despite short-term market fluctuations, the value of good companies will increase. It's like planting a seed and waiting patiently for it to grow into a mighty tree. This approach requires a thorough understanding of the company you're investing in and a lot of patience, but it can be rewarding. Think about the early investors in companies like Apple or Amazon who held onto their stocks and saw massive returns. On the other hand, short-term selling involves buying stocks and selling them within a short period, often within a year, to make a quick profit. This strategy can be thrilling, like a roller coaster ride with all its ups and downs. It requires a keen eye for market trends and a strong stomach for risk. It's not for the faint-hearted, but it can yield significant profits if done correctly. Now here's where we dispel a common myth. Some believe that to make money in the stock market, you need to be constantly buying and selling. But that's not necessarily true. In fact, many successful investors have made their fortunes by holding on to their stocks for a long period. They understand that the market can be unpredictable in the short term, but over the long haul, good companies tend to thrive. So sometimes the best action is inaction. This doesn't mean you should ignore your investments. Regularly reviewing your portfolio, staying informed about your companies, and being prepared to adjust your strategy when necessary is crucial. But remember, investing is a marathon, not a sprint. But what if you don't want to go it alone? Well, that's where the next scene comes in. You don't have to navigate the stock market alone. Brokers and advisory services can be your allies. The stock market can sometimes feel like a labyrinth, but thankfully you don't have to traverse it solo. That's where brokers come into play. These professionals act as the go-between for buyers and sellers. They execute trades on your behalf, typically for a fee or commission. Whether you want to buy shares from a particular company or sell your current holdings, brokers make it happen. They are the ones who can turn your investment decisions into real transactions in the stock market. But it's not just about buying and selling. Brokers can also provide valuable insights and market updates, which can be instrumental in making informed decisions. They have access to a wealth of data and can analyze market trends to give you a clearer picture of where your investments stand. Now let's dive into advisory services. These services do more than just execute trades. They offer personalized advice tailored to your financial goals and risk tolerance. They look at the bigger picture of your financial situation and guide you on which stocks to invest in, when to buy, and when to sell. Advisory services can be particularly helpful for beginners who are just getting their feet wet in the stock market. They can provide education, guidance, and even help in constructing a portfolio that aligns with your investment goals. But here's where we bust a common myth, that brokers and advisory services are exclusive to the wealthy. Not true. Many brokers offer services at different price ranges, and some even offer zero-commission trades. Similarly, there are advisory services that cater to investors with smaller portfolios. So you see, with the right help, anyone can navigate the stock market. Brokers and advisory services can be your compass and map as you journey through the world of investing. With the right guidance, anyone can successfully invest in stocks. But remember, it's not a get-rich-quick scheme. So, is investing in stocks a myth or a reality? Let's revisit our journey. We've navigated the basics of stock investing, understanding that it's not a game of luck, but a strategic play. We've learned how to choose stocks wisely, considering company fundamentals and market trends. We've unraveled the art of holding and selling stocks, recognizing that patience is a virtue in the stock market. And let's not forget the role of brokers and advisory services who can provide valuable guidance and support on this journey. Investing in stocks is indeed a reality. It's not a magical pot of gold at the end of a rainbow, but a potential path to financial growth and security. It requires knowledge, patience, and sometimes help from professionals. But with these tools, you're equipped to navigate the world of stocks. Investing in stocks is not a myth, it's a reality. And now that you know the basics, you're one step closer to making it your reality.